Hello and welcome to this session in which we will discuss assessing and documenting the risk of fraud. In the prior sessions, we looked at what is fraud, introduction to fraud, and we differentiate between the types of fraud, which is financial reporting or misappropriation of assets, and we differentiated between errors and fraud. So in this session, we look at assessing. When we find fraud, when we suspect fraud, how do we assess this process? How do we document this process? Now keep in mind, fraud represents one of the most complex and challenging aspects of the auditor's work. Why? Because if someone makes an error, usually they don't hide it. However, when someone commits fraud, they hide it. It's deliberate. It's hidden. Errors are accidental. Frauds are intentional and often accompanied by collusion. There's more than one person involved. So you have one person covering for the other. So this means it's harder for the auditor to do what? To detect and prevent fraud. This means auditor must go beyond the surface when assessing and documenting fraud risk. You have to rely on a combination of knowledge, professional skepticism, and tools or strategies. But the first thing I'm going to talk about is what is the auditor's responsibility when they are conducting an audit when it comes to fraud. Then we'll talk about what are the sources of those risk factors and how and why do we document this process. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
Starting with what are auditors responsible for? So as an auditor, you are engaging in a plain vanilla audit. What is your responsibility for fraud? Well, guess what? You are expected to obtain, guess what type of assurance? Reasonable assurance that financial statements are free of material misstatement, whether caused by error or fraud. So what is our standard? Reasonable assurance. Why reasonable assurance? Well, for one thing, as we mentioned, by its nature, fraud is hidden. Fraud is concealed. So those committing frauds don't leave any evidence, breadcrumbs laying around for the auditor to follow. Although we could be conducting an audit 100% following the standard, well, we could still not provide anything more than reasonable assurance. Why? Because we cannot provide any absolute guarantees. Why? Because in an audit, what do? We sample. We don't look at everything. And even if we look at everything, we might miss certain things. So that's why we cannot give absolute assurance. We give reasonable assurance. So we sample. And fraud does not always become obvious in samples. If you're sampling, you may not pick up that transaction or that event that shows you the fraud. Add the factors like forged document or collusion, which is the most difficult when you have people in the company trying to hide it. And it becomes clear why the focus is only on reasonable, not absolute assurance. Part of providing reasonable assurance is using professional skepticism. Now, what is professional skepticism? Well, we talked about professional skepticism separately in a separate recording, but we're going to go over it again just to give you an idea that it's a professional judgment. Professional skepticism is part of a judgment. Judgment means you are using your experience, your knowledge, your education, your intuition. So using professional judgment, professional skepticism, which is what? Professional skepticism is something that you have to use throughout the audit. It means what? It means a questioning mind. You are looking at things from an investigative perspective. You're looking at it and you're questioning the numbers, the figures, what's presented to you. So auditor must maintain a questioning mind and critically assess evidence, always considering that fraud could exist no matter how honest management seems. Now you don't accuse management of anything. You just kind of, ask questions. You verify the information that they're giving you. So professional skepticism it has two main components, and those are questioning evidence. You look at the numbers. You just look at the evidence and you question the evidence. Are the numbers consistent? Do they make sense? Looking at the overall pictures. You have that question in mind. 2, critical thinking. You ask deeper questions when something feels off rather than take an explanation at face value. So when they tell you something, you don't just take it and run with it or accept it. You question it. You ask them further questions. You ask them for explanation. Anything that does not make any sense. Just FYI, we have one whole recording about professional skepticism. The reason I mention it here because it's part of assessing that fraud risk. You have to use your professional skepticism. Think of it this way. If you're assembling a puzzle and a piece does not fit quite right, you don't just jam it in. You want to pause. You want to see, does it really fit there? And see if you overlooked something. That's skepticism. Just basically, it doesn't fit there. Why is it there? It almost fits, but it doesn't fit. They're telling me it fits, but it doesn't fit. Why? Maybe there's another piece somewhere else. So using professional skepticism will help you assess those risk factors. Now, what are some sources of fraud risk information? We're going to list few sources for fraud risk. So when you are gathering information about fraud risk, where do you look at? Well, the first thing is the team that's conducting the audit will have to discuss the fraud risk factor. So once you are assigned to an audit, one of the things that you do is communication among the audit team. Okay? It's called brainstorming. The technical word, it starts with brainstorming. Now, why do I have the picture of this van here? I always tell the story when I talk about brainstorming. My first audit was about a home owner association in Bethlehem, Pennsylvania. You don't care what it is. It's a homeowner association. So I remember it was the senior manager, a senior accountant, and myself, all three of us, in a van driving to that site to conduct the audit. It was supposed to take a day or day and a half. When we got on Route 22, the local route, we got stuck in traffic. So as we sat in that van, the senior manager said, let's go ahead and brainstorm some ideas about some possible fraud. So the audit team discusses potential risk, weaknesses in internal controls, and areas where fraud might occur. So we discuss things like, okay, we're going to be auditing this homeowners association. Let's think about where could fraud occur. Where could fraud occur? For example, think about the homeowner association audit. What do we know about this? And usually, maybe we did conduct prior audit and we are familiar with this. So the team might ask questions like, could someone be manipulating vendor invoices to inflate cost? You might be saying, why would the homeowner association inflate the cost of whatever they are buying, goods that they're buying, maybe material? Why would they be doing that? Because they might have a relationship with the vendor to pay the vendor extra, then the vendor will pay them. The manager in charge of the homeowner association basically gets a cut. We want to take a look at their cash disbursement. Are they to legitimate contractors? And are they at fair value? Let's look how much they are paying their contractors. Is this a fair value? Why? Because the risk is if it's not fair value, then they are abusing the role. Management is abusing the role, abusing the homeowner association funds. Is there a chance that supplies or assets are being misused or stolen? Those are the few things that we can think of. Now keep in mind, small or large, some conversation could reveal vulnerabilities to auditors. that you may not notice if you're working alone. So why we're using 3 people talking about this, everyone talking from a different perspective, shedding light. And this is the importance of brainstorming. So communication among the audit team is a source of fraud risk information. Now bear in mind, you don't stop. So once we get off traffic, we don't stop talking about this. We talk about it throughout the audit if we find something. Why? Because this is an ongoing audit. Now bear in mind, this was a 1 day, day and a half actually, to be more specific. We had to go back the following day, I don't remember, but that's one source of fraud risk information. The people who are working on the audit, they talked up amongst each other. The process is called brainstorming. Now bear in mind, this is a small audit. We discussed it in a van. In a larger audit, we might have to meet on a table and discuss it, and obviously we are going to document this. We'll talk about documenting later. We did document it, what we talked about. That's one. Another source of fraud risk information is you talk to management and employees. Auditors talk to anyone and everyone, and you should talk to anyone and everyone. Think of this as detective work, gathering insight from management, legal counsel, employee and accounting, even those are on the operational side. Just ask questions, friendly, open-ended questions to cover details. Sometimes those employees working in operation, they might tell you something that you may not be aware of. Maybe accountant is hiding it, legal counsel and management is hiding it, but operation, they're innocent. They don't know why they're supposed to tell you this. So it might lead to big revelation, and this happened in the real world many times, or oftentimes, not many times, oftentimes fraud is discovered by accident. That's the most common way to discover fraud. And how do you do it? Friendly, open-ended questions with the people. So you kind of talk to them about, are they awareness of any fraud concern? Just ask them innocently. Are you aware that fraud's going on in the company? I'm the auditor. This is my job. Just FYI. They might say, no, we're not. Or no, they qualify now. And they might you want to look at their attitude. How seriously do they handle suspected fraud? So if you tell them if there's fraud, what do you think management would do? So to kind of gauge their attitude about fraud and about how management look at fraud. So here's a real world example why asking questions sometimes might help. In one case, a warehouse security guard mentioned a company moving inventory between location overnight. So when the auditor arrived to that warehouse location, it was in New York City, and they asked the guard to give them access. The guard told them, are you with the same group that brought the inventory last night? And the auditor was like, hold on a second, when did they move the inventory? Oh, it was last night. What ended up happening, that company was moving inventory from one warehouse to another, so the auditor would count the inventory more than once. So this is how they discovered it, by mistake. So this tipped off the auditor to fraudulent inventory count. So the security guard did not even know that they're sharing information they were not supposed to sharing. They're just answering a casual question. Actually, in this situation, the security guard kind of tipped them unknowingly. So lesson learned is sometimes asking innocent or simple question can crack a case wide open when it comes to fraud. Sometimes you're not looking for fraud. Again, most of the time you find fraud by mistake. And research shows that fraud most of the time is discovered by mistake or a tip. Usually mistake and a tip. Those are the top 2 sources how you uncover fraud. Now let's take a look at this multiple choice question from farhatlectures.com. Which of the following statement regarding fraud risk assessment is correct? So 1 is correct, and obviously we're going to have 3 incorrect. Let's start with D. The existence of a fraud risk factor means that fraud exists. Really? Not necessary. You might have fraud risk factors that could indicate possible, but it doesn't mean fraud exists. I would say D is an easy elimination. C. Analytical procedure must be performed on revenue account. Well, do you have to perform revenue recognition, analytical procedures on revenue account? Yes, you might. You should. Why? Because remember, the revenue is always suspected of fraud. So I will keep between C and D. I will keep C. B. Horizontal analysis is not useful in helping to determine unusual financial statement relationship. Is it? Absolutely it is. What's horizontal analysis? Looking, for example, at at items horizontally across period, horizontally across period, and the changes. It is useful in determining unusual financial statement relationship. It is useful. So it is useful. It's not useful. It is useful. Therefore, it's incorrect. The auditor cannot make inquiries about fraud to company personnel who have no financial statement responsibilities. Oh no, you want to also talk to people in operation, because sometimes people in operation, they might know something that it could be innocent for them, but it could be valuable for you. You want to talk to them as well. Therefore, yes, you talk to people in operation, not just people with a financial statement. As we predicted, analytical procedure must be performed on revenue accounts, because revenue accounts are always assumed that fraud exists in revenue. Therefore, it's looked at a little bit more closely. What should you do now? You want to go to Farhat lectures, look at additional resources, lectures, multiple choice, true, false. The best investment you can make, whether you are an accounting student or a CPA candidate, is invest in yourself. Good luck, study hard, and of course, stay safe.